So our underlying assumption is as long as credit is made improvingly available, which it is for C&I loan demand, even real estate loan demand and consumer loan demand, then you have a positive economic
So what's boosting this market? You got intraday records right now, transportation average,
more
and you got
money
intraday S&P.
Charles is right.
Supply and demand.
Supply and demand. 80% of the S&P 500 is owned by institutions. Institutions typically keep a constant level of cash. So if the number of shares is reduced, they have more money to boost their holdings. So there's more money chasing fewer shares. Something called the Federal Reserve is continuing to add money to financial assets, and they're keeping a zero interest rate policy, so it means that these companies have nothing else to do with their money. They might as well shrink the float. Float shrink is growing faster than dividends because float shrink ends up in higher stock prices than dividends do.
That's interesting.
And also, it's a very important thing to Charles's point. If it were about the fundamentals in what has been a slow growth, subpar economic trajectory since the end of the recession, how would you have high yield debt at its lowest level in yield ever? You have a record valuation level for high yield debt in a weak economic recovery. It doesn't make sense. It has to do with money flow. Money flow is going there, and it's going to buy back stock and do M&A, which reduces share count and boost perception of earnings.
Now, most people wouldn't want to hear what I'm going to say now, but from 66, the Dow first approached 1,000. It didn't go over 1,000 until 83. 17 years. We had an 8 average PE of under 10. It was low growth, after inflation, less than 3% growth in income. Common during that whole era. From 83, when we had lower taxes, the PC was developed, we had the internet, broadband, all that followed from 83 on. Up until 08, we had over 5% growth in after-tax income, not even including the money coming out of mortgages.
Yeah. You know what I'd love to look at when you say the float shrink is, I think this is such an important point. Look at the Wilshire 5000. There aren't 5,000 stocks in the Wilshire 5000 anymore. There are 3,100 or something.
Well, we have a government that makes it more difficult.
Same with the Russell.
We have a government that makes it more difficult to do anything. I was thinking maybe I could take my company public, and then people said, "You're crazy. Well, you don't want to do
Why
that."
would you do that?
And so it's really, we have a government that makes it. Look, if you want to spur growth, make it easier to start something new, do something creative. No, we have it where it's harder to do anything.
Now, at the same time, based on other research, Tony says there's a shot this market could trade down 7% over the midterm.
Well, to me, it's a function of will companies keep shrinking the float? You know, the other hand, the new offering calendar will probably rebound before July, not even including the big deal from China.
Alibaba. So does Alibaba happen after July 4th?
I'm not sure. I think so.
Okay.
But when new offerings top $10 billion a week, the market has a big headwind, everything else being equal. So to me, I'm bullish until we see new offerings top $10 billion a week, unless there's some other exogenous change or shock or something.
And that's typically what happens. You get an out-of-nowhere news item. For example, nobody knew that Alan Greenspan was going to go to Japan in the overnight session and do his irrational exuberance speech. So if you were trying to predict what was going to cause that correction,
Japan was up overnight,
right? Nobody, and all of a sudden, bam, you got hit in the tape. So again, I'm the high target on the street. So I think we're going to have, history suggests that we're at this point going to have a correction. Once you get it, it is a dream from the market gods. As long as the inflation remains low, the Fed remains neutral. It's easy.
Right.
The yield curve remains steep, and the economy and earnings are positive.
All right, what's your position? And based on everything you're saying, what do you want to do with your money?
Well, I'm fully invested and plan to stay this way until we see a change in the supply and demand characteristics, but do not expect an improvement in the economy. The problem for most investors, they think that there's some sort of relationship between the economy and stock prices.
It's not fundamental at all, is what you're saying.
Yeah.
It's all technical supply and demand.
But that's not right.
Well,
historically, the closest correlation
No, earnings have never proven.
It's the direction of earnings, not the rate of change. It absolutely has the closest correlation.
It's always been supply and demand that has proven.
Correct, but what brings in the demand is the perception that the fundamental direction is positive.
That's a point. That's a fair point.
We can go on. I could prove whatever.
What? You don't think the fundamentals? It has nothing to do with earnings growth?
It has nothing. Earnings creates.
Not earnings growth. Earnings direction. That's the key.
there's no academic study that shows understanding future earnings growth has proven future market direction. We have proven that supply and demand change does indicate future stock market direction. That's my point.
All right, and your point is demand happens because of an expectation of earnings.
Basically, as long as the yield curve, if the yield curve inverts, you have a certain percentage of time before the demand falls off because the perception of
Demand happens because there's more money available.
Oh,
How do you get more money available? You get
have
it from
more
credit
income.
or earnings or income.
No,
which is positive
more
direction
money
of
comes from income in the economy, not from company earnings. The money to buy stock does not come from the economy. It comes from individuals making more money. If you're making 2%, you don't have extra money to invest.
Well, don't fight the tape today, that's for sure. Market up 41 points. Gentlemen, thank you very much. Charles Biderman, Tony Dwyer, good to see you both. We appreciate your time today.